Oil prices are volatile right now, to say the least, dropping 15% last week and back up above $100 a barrel today. But according to the data compiled by Bloomberg, oil stocks are actually the cheapest equities in the S&P 500. Energy suppliers have earned almost $500 billion since 2006. That's larger than the GDP of Argentina. But with oil prices uncertain, investors are asking if now is a good time to buy energy stocks. Joining us now is Fadel Gheit, an oil and gas analyst at Oppenheimer Co. He's one of the most accurate forecasters of the industry, and we call him a Bloomberg best. Thanks so much for joining us, Fadel. Let's start right away by asking how much the oil price does matter to the stock of the big, say, the big majors.
Well, it matters a lot, not only for the major, the minors, and the major, and in between. I mean, rising tide lifts all ships. If we have $100 oil, it's better than $80 oil. If we have $120 oil, it's even better. So the industry is going to make more money, and companies will make more money, and the valuation will have to go up.
Although I remember, Fadel, when the oil price soared in 2008, the integrated oil companies didn't always do so well on the up days because people would say it puts pressure on their refining margins.
That's correct. But a couple of things also, because if you are an investor and you see oil prices rising, you don't want to own Exxon, you don't want to own Chevron. You would want to own the companies that have much higher leverage. You would want to own smaller stocks, smaller companies that oil prices will mean a lot relative to their valuation. Again, when oil prices start coming down, you're not going to see the same decline, percentage decline in Exxon as you see, say, in an Apache or smaller companies, because of, again, relative valuation, higher beta also.
Fadel, let's go back to the initial premise, which is why we wanted to have you on today, and that is the idea that energy stocks are the cheapest equities in the S&P 500. That's according to Bloomberg data. You agree that energy stocks are undervalued here?
Yes, but for a reason. Well, a couple of things. I do believe that energy stocks will remain discounted in valuation relative to the S&P 500 because they are not growthy stock, because there is a lot of volatility, because they don't control the price of the commodity they sell. They are price takers. They do not set price for what they sell. So therefore, they deserve the discount. ExxonMobil will always sell at a discount to the S&P 500 because of the lack of growth, because of the uncertainty regarding the commodity, the price of the commodity that they basically sell. So that we can understand, but to answer the question, is it the right time to buy oil stocks? You always can find an attractively valued stock in any group, especially oil.
But not all oil stocks perhaps are created equal. So tell me, what are some of your favorites out there and why?
Well, I don't. We don't have a favorite. We have a group of companies that we think that they are undervalued. One of them is Marathon. We think Marathon is still undervalued. The stock is up 40% year to date. I still believe it's undervalued. There's an upside potential of at least another 20% conservatively if we don't see collapse in oil and gas prices. I see a lot of stocks that are very attractive. Apache, for example, is very attractive stock at the current level. It's over $100. It's $120 or $125, but our price target is $150. So we look at what these stocks reflect in terms of commodity price, and you see these two stocks that we mentioned are trading in the single digit of price earnings and price to cash flow.
So even though Marathon is up, about 40% year to date, you still like the valuation, you still say it's a buy here?
Absolutely. Again, it's 8.5 to 9 times consensus estimate for 2012, which we think are low. All consensus estimate when it comes to oil and gas, they're always low because people are not sure if oil prices will remain at $100. My take here is that oil prices are likely to remain at the current level or even go higher.
Where do you think, we were talking with Michael Arenstein earlier, and he said he thinks that all the froth we're seeing or I guess froth is the wrong word to use, but all the gains we've seen in commodities are speculation, and that for the global growth, that's priced into the current commodities prices, oil included. What do you think about that?
I always say that oil prices will remain inflated, but we don't think that oil prices will reflect the market fundamentals, which will bring them down to about $70 to $75. You see what's happening in the Middle East. It's likely to get worse before it gets better. Between Yemen and Libya and Syria, the former oil minister of Saudi Arabia said, if we have an unrest in Saudi Arabia, you could see oil prices going close to $200. So obviously, higher oil prices are here to stay.
Fadel, we have to run. Fadel Gheit, thank you.